How's it going, everybody? It's Stas here. So the markets have been crazy, and we got to talk about them in this video. We're going to break down some stocks, some charts, earnings reports for this upcoming week, and kind of my game plan for this upcoming week as we're seeing crazy volatility, crazy fear, and crazy uncertainty out there. So if you guys find value, hit the like button, subscribe, drop a comment, let me know your thoughts, and check out my Patreon. If you guys want all my buys, sells, call outs, morning update videos, plus more. All of that's on Patreon, link down below. And you guys could also get 50 free bucks from M1 Finance, also linked down below. And with that being said, let's get right into the video. So let's quickly go over what happened last week, which you guys probably know at this point. We had a short week. We had Thursday off. Friday was a half day, but that doesn't mean we didn't have volatility. We had a lot of volatility, a lot of action in the short week we had last week. And before we even talk about earnings for this week, stocks I'm looking at, let's break down SPY and Triple Q and see what the heck is going on and kind of my outlook for this upcoming week. And by the way, as of now, it's 11 a.m. on the East Coast. The futures market is not quite yet open, but when you're watching the video, the futures will be open. They open at 6 p.m. on the East Coast, so we got to see what those are looking like first and foremost, and let me know in the comments when you're watching this video what the futures are looking like right now. So let's talk about what happened. SPY last week on Friday alone went down almost $10.50. It went down over 2%, while Triple Q went down about 1.9%, and it lost about $7.50 in value. And both of these, well, there are some key differences here, but both of them are pulling back aggressively from their recent all-time highs, right? Let's take a look here at SPY. We hit an all-time high just a couple of days ago, guys. It was just 6 calendar days ago, 7 days ago, we hit 473. Now we're trading well under the 50 SMA, and now we close under the 180 SMA, and we closed at $400 and almost $59, and we went down even more in the after hours on Friday, down to about 457. So we're down about 16 bucks from the all-time highs, or about 3.5%, which in reality is nothing crazy. We've seen pullbacks like these many times in the past, right? And the key thing here is, again, we're trading under both moving averages on the 4-hour chart, that is. So where could we go? We probably could sell off to about 454, which was resistance back in the beginning of September, end of August. We could maybe sell off to 447, which was resistance middle of August, also end of September, and a little bit in the middle of October. You know, these are levels on the downside that potentially we could be heading to, right? And when it comes to Triple Q, the key difference here between Triple Q and SPY is Triple Q is actually above the 180 SMA, unlike SPY on the 4-hour chart here, and we're hanging on to it. And if this does hold, maybe, just maybe, excuse me, guys, we see some sort of relief rally, but the second, and I mean the second, we collapse under 390 right by the 180 SMA here, we're probably going to go to 380, 382, which is the next prominent level of support, which was resistance back in the middle of September, early September, late August. So that would be my next price target, about 380 to 382. And we all know at this point what's going on, or maybe we don't. If you guys have been in a food coma for the past couple of days, maybe you've been living under a rock, you don't know what's going on, but most of us know there is a new strain of the CV in South Africa, and there's a lot of uncertainty around it. And the truth is, I'm getting a lot of questions about it. Stas, are we going to sell off more? Is this legit? What's going on? The truth is, it's too early to tell. We don't know how this is going to spread. We don't know how dangerous it is, how many lives it's going to take. We don't know any of this quite yet. It's just way too early, which is why there's a lot of uncertainty, right? Because people understand what happened. You know, last time we saw another strain, the first time around we saw, you know, what the heck happened, which was crazy. You know, we had a big drop in March of 2020. We all remember this. So it's kind of bringing back that past fear to the present, if that makes any sense. And the truth is, guys, I don't think we're going to see a crazy drop like we did back in March of 2020. I just don't see it. Maybe we do go down 5-10% from the all-time highs. We're already down about 3-4%. Maybe we do go down a couple more percentage points, but unless it's a crazy, deadly, unless it's crazy, which I'm not sure yet, it's too early to tell, I don't think we're going to see a crazy drop. That's just me. I'd love to know your thoughts. Let me know down below in the comments. Make sure to hit the like button, but I'm just not seeing it quite yet. And again, I could be wrong. We just don't know yet. It's too early to tell. And that's just kind of my opinion there in a nutshell. And again, I'd love to know yours. Drop me a comment down below. Now, with that being said, now that we got that out of the way, right, let's talk about some of these stocks. We have earnings coming up this week, and a lot of the earnings this week are tech companies, right? Maybe you would call these stay-at-home stocks. I don't know. Some of them are. And some of these did well on Friday, as we did see the crazy volatility. The VIX went up 55%. The market sold off like we just talked about. So let's go over some of these stocks. Number one is Snowflake, ticker symbol SNOW. This is one of them that did pretty well on Friday. This went up $7 per share on Friday. It went up over 2%. And it seems like, as of now at least, on the 4-hour chart, this wants to continue the uptrend, right? If you guys take a look, we got pretty overbought, pretty overextended when it hit 405. It doesn't take a rocket scientist to say that, right? We were extremely overbought. The RSI was at 80, 85. We were extended above the moving averages, and we were in dire need of a pullback in terms of this stock. And that's what we got. We went from 405 down to about 340. That was a drop of 15%. So it got into a correction pretty quickly, and it seems like buyer stepped in around the 180 SMA at about 340, 345 and bid this thing up. Now we closed above 360 on Friday, and it looks like it wants to go higher by the looks of it as of now, guys. And you can see every time we've pulled back in the past on this chart, Snowflake has held the 180 SMA. So this time it could be a little bit different, though, because of all the volatility, all the uncertainty. But as of now, the chart looks pretty good. So we're going to be watching Snowflake. They report earnings on the 1st, which is what? What's the first? Wednesday, I think. I don't know, guys. I forget the days. It's 30 days in November. Tomorrow's 29th, Monday, Tuesday's 30th. Okay, yes, Wednesday, Snowflake's reporting, so keep your eyes on it. Stock number 2, we've talked about a lot recently, but we have to cover it again considering this is a top stock, in my opinion, for at least early December, and they also report earnings. It's CRM, ticker symbol CRM, Salesforce. They report on, let's see here, the 30th. So we know that's on what? Tuesday? They report on Tuesday. And as of now, this one is trading under both moving averages on the 4-hour chart, both the 50 and the 180 SMAs, right? But it's still holding the uptrending channel despite it trading under both moving averages. So in my opinion, if 280 holds, as long as 280 holds, maybe we do see some sort of rally. And it really just does depend on the futures, guys. Not much so the futures, but how the market reacts tomorrow. If we see another big drop on this fear, uncertainty, these stocks are probably going to go lower. I'll be the first to tell you. I'm not going to BS and sugarcoat you. CRM will probably go to 270 if we do see another drop. Snowflake might drop. These other stocks we're going to talk about, they might see more red. But as of now, the trend's looking solid. We're holding the uptrending channel with earnings coming up on the 30th. CRM is for sure one that I'm watching this upcoming week. Now, let's talk about Dropbox, DBX. This stock has been slaughtered recently. I mean, I don't know what the heck happened. This was a mid-30s stock. It was at $33 back in the summer, early August, and now the stock's in the mid-20s. It's seen a big haircut. It's down at least 20%. That's got to be it. 25, 26%, putting it in a bear market, and it seems like they reported earnings on, when was this? The 4th, so about 3 weeks ago in the early November. And since then, it's gone down about $7 per share. So that's telling me the earnings were not good. So let's see what they did here. Adjusted EPS of 37 cents versus 35 cents. They beat. Sales came in at $550 million versus $544.3 million. So double beat. Their guidance must have been awful, though. It had to have been. Why? I mean, why else would the stock be down 30%? Dropbox down over 9%, on pace for largest percent decrease since August 2020. That was back on the 5th of November. I'm not seeing anything on guidance here, though, but it's got to be either they reported bad guidance or they withdrew the guidance. Things like that will cause a stock to go down, even though they double beat, which is what we just talked about. So at this point, this one's pretty oversold. I'm noticing a bullish divergence on the 4-hour chart. It's clear that we're seeing that bullish divergence. And if I pull up, let's say, the 3-year chart, this looks pretty decent, in terms of it holding the uptrend still, this simply being a pullback. And we're noticing we're approaching, we pretty much are at this level right now. We're at the support level from the beginning of May. It's at about $24, and you guys notice last time we hit 24 back in May, this thing rallied to 33. So this is a very pivotal spot for Dropbox, and now that I'm seeing it, we're above the 180 SMA on this 3-year chart as well. So as long as we hold 24, 25, and we start rallying back to the high 20s, with that bullish divergence we're seeing on the 4-hour chart, I think DBX is going to be a play. But the second we take out the May lows, early May lows at $24, which we're hanging on by a thread right now, guys, the second we take those lows out, that's going to be a different story. That's going to be pretty worrisome to me. We might see more red at that point. It could go lower 20s, maybe back into the teens. That's possible, guys. So be careful. Set your alerts. I'm going to put my alert. I'll probably put 2 on this one. Mark is at or below 24. So I want to get alerted if this thing falls under 24. And I also want to get an alert if it breaks above, let's say, 25.50. So 2 alerts, 1 at 24, 1 at 25.50. So we're going to be keeping an eye on DBX, and we're already kind of seeing some support the past 1, 2, 3, 4 days above $24. So that's a pretty good sign overall that we're trying to break out, but we're just not seeing the breakout quite yet. We're just seeing consolidation, hence why I have alerts. So I get alerted, right? That's what they're for. So DOCU, they report earnings this week on the 2nd. So that's on Thursday. And this is one of those stay-at-home stocks. This went up 2.5% on Friday, up $6. And realize this. If this new strain is not as bad as people think, or it's just really nothing crazy, these DocuSigns, the Zooms, these stay-at-home stocks that rallied on Friday, they're most likely going to dump, guys. So keep that in mind. Unless DocuSign reports great earnings on the 2nd, if these fears go away, the stock's probably going to dump. But we're watching it anyway, right? They have earnings on Thursday on the 2nd here. We're in a downwards channel. We're trading right at the moving averages, under the moving averages on the 4-hour chart. So if this thing starts breaking out, seeing some momentum out of 260, 270, right by those moving averages, we might get a nice breakout, with earnings coming up. So I'm going to set my alert for DocuSign. I'll do 2 on this one as well. 1 at 265, and then I'll do another alert at 270. So we're going to be watching this heading into this week, and I'm going to be watching a lot of the stay-at-home stocks. There's ones that I'm not touching no matter what, like Peloton. You couldn't pay me to buy that stock, guys. I freaking hate Peloton. I've said this for months, and I should have shorted it. I was so strong about, going against Peloton. I was telling you guys months ago that I didn't like this company. I didn't like the stock. And this was back when it was over 130, 150 bucks. I should have shorted it. But you guys know I don't really short stocks. But in hindsight, I should have. And if I did, I would have made a killing. And would I short it here at 45? Probably not. At this point, we might see a rally back to 60 on fears of this new strain. Who the heck knows? And if it did rally to 60, 70, maybe then I would short it, But overall, yeah, be careful. Markets are crazy right now. Who the heck knows what's going to happen? A lot of uncertainty out there. Marvel Technology. This is another one I'm watching. This one is near highs at this point. We hit $76 back in the middle of November, so about 10 days ago, and I believe that is the all-time high. Yeah, it is. It is the all-time high here on Marvel Technology. And now we're selling off towards the 180 SMA at about $68, $70. And they have earnings coming up here on the 2nd, so same day as DOCU. That's on Thursday. And I'm thinking if earnings are decent, EPS, revenue, guidance, all that good stuff, and we see a bit of a drawdown, 68, 70, this dip could be bought up. I mean, last couple of times it seems like they reported earnings, the stock has rallied. It's done well afterwards. So I'm not necessarily saying history is going to repeat itself because it doesn't always do that. But in this case, the trend's looking good. We're a little bit off the highs, about 3, 4, 5, 6, 7%, right around there. And it's worth watching because a lot of trends in the markets right now in terms of stocks, they're looking ugly. But this one, MRVL, doesn't really look that ugly. The trend looks pretty solid. So, yeah, keep your eyes on it. $68, $70. That's where I think the buy zone is. And as always, please, guys, do your own research. Don't buy based on my videos. Don't do anything based on my videos. These videos I post because they're my opinion, right? This is for entertainment purposes only. Do your own research as always. So MRVL, watch it. AI is another one that I've been getting a lot in my comments. C3AI Inc. This is an AI company, and admittedly, I don't BS you guys. I don't know much about this company. I'll be the first to tell you. But they also report earnings this week, and I've been getting it blasted in my comments. Stocks, talk about AI. Here we are. We're talking about AI, and no, not the basketball player. We're talking about C3AI, right? And again, I don't know much about the company, but what I can tell you based on this chart is the company's been, the stock has been destroyed. It was $92 back in, when was this? The middle of March, and now we just hit $35. So it's down about 60%, and it's straight up been downtrending for months. Probably all of this year of 2021, it's been in a downtrend. You guys can see it. Holy crap, it was actually $180 about a year ago. What the heck happened here, guys? Again, I'm kind of out of the loop on this stock, but okay, it must have went public. Okay, yeah, it must have went public back in 2020 because the chart, the data doesn't go much back before December of 2020. So they probably went public about a year ago. The stock saw that initial hype run from 93 to 180. Now it's at $30. And this is a perfect example of stocks that go public, right? And they see that initial hype, and everybody's like, oh, I want to get in, I want to get in, I want to get in. This is the future. But sometimes patience is key. Sometimes, not all the time, sometimes stocks that IPO, they run up and they never come back down. But a lot of the time, guys, from my experience, stocks, they see that initial hype phase when they IPO. And then a couple months later, a year down the line, they're down a lot. And that is when we see that opportunity to actually buy in if we see value. Because all the time I say this, guys, when stocks go public, whether it's IPO, direct listing, SPAC, whatever, people that were in early on in the early days, they're looking to get out. They're looking to dump. They're looking to sell their shares onto the open market to public investors or retail investors, right? And they're making a killing. And when the lockup periods expire, that's when they dump even more. That's when they're allowed to actually sell, whether it's 30, 60, 90 days after the IPO, whatever. And that is when you see the real opportunity as a retail investor to actually buy into the public stocks, right? So now that it's down from $180 to $36, guys, holy crap, that's 80%. Now would be the time. And I'm not telling you what to buy. Again, I haven't done my research into AI, but it's been destroyed. And they have earnings coming up on the 1st here, so in a couple of days. And this could be an interesting play if they do well. I mean, we have to wait and see EPS, revenue, guidance, if the trend breaks. Me personally, if I were to get into this, I would want the moving averages. I would want to break out of the moving averages first. I would want to see the trend reverse, but that's just me. I don't really want to buy into this, as a trade unless it breaks out. which we're going to be waiting for, and I'm going to be watching it very closely. And the last one for today, before we wrap up, guys, I appreciate all of you for being here, by the way. Make sure to hit the like button if you haven't done so already. The last one is Five Below, ticker symbol FIVE. This has been a pretty volatile stock. From 237 back in the end of August, it hit 165 in the beginning of October. That was a 30% drawdown, and now we've ran up from 165. Now we're a little bit above 200, so we've rallied about 20% roughly, and Five Below reports earnings on the 1st, so that is what, on Tuesday? Five Below reports earnings, and I'm interested because now it's the holiday season. Sure, maybe we're not going to get the full holiday numbers in their report coming out. We're going to have to wait for the next report, but I'm interested in either way. You know, Five Below, people go there, they buy the little trinkets under $5. They do a lot of shopping. I go to Five Below sometimes. I mean, I don't really buy much. Sometimes I just go and buy some candy. You know, I'm still a little 5-year-old at heart, guys. I'm a little fat kid at heart. Hey, I go there and buy some candy. Maybe I buy a little drink or two, a Monster, soda, whatever. But I know a lot of people go there. Every time I drive by Five Below, it's pretty packed. So I want to see what goes on, what goes down with these numbers, and I want to see if we break out of the wedge. You guys notice we're making higher lows at the same time as we're making lower highs, digging ourselves deeper into the wedge. So I really am interested in seeing what direction we do pick heading into these earnings that are coming out on Tuesday. Or what is that? Wednesday? I keep mixing the days up, guys. Just know all these companies are reporting this week, right? And we'll talk about their earnings when they do end up reporting. So, yeah, Five Below, keep your eyes on it. I'm very interested. And, yeah, that's pretty much it. We talked about Snowflake, CRM, DBX, DOCU. We talked about my hate about Peloton, my hate of Peloton. We talked about Marvel, AI, Five Below. So now drop me your watch list down below. Let me know your thoughts on the markets. Do you think we sell off more? Do you think we bounce back? Let me know down below in the comments. Make sure to hit the like button, subscribe, and check out my Patreon. If you guys want all my buy, sells, call outs, morning update videos, more access to me throughout the day as well, plus more, all of that's on Patreon, link down below. Or you guys can go to StockSurfest.com/Patreon. That's StockSurfest.com/Patreon. And also get your $50 from M1 Finance. That's limited time, link down below. And get yourself 2 stocks from Webull up to $1,600, also linked down below. And with that being said, I'll catch you guys in the next video, which I did make an M1 Finance portfolio update video yesterday going over my YouTube portfolio. Check it out here. Click that. I'll see you there. Thanks for watching as always. Keep crushing the markets. Stay safe out there, guys. Peace out.